All right, guys, this is Legend FS, and this is my first YouTube video. And in this video, I will be walking you through on how you can be able to spot a major reversal. When I was starting out to trade, when I was learning how to trade, to spot a major a reversal point has always been my problem. I don't know when I don't know when a trend wants to change and when a trend wants to continue. Over the time, I keep on learning, and I also find out that a lot of traders are. This is also their problem: how to spot a major reversal in the market. Maybe the market is going down. You keep on selling, keep on selling. How do you know if a trend wants to change? So that is another major problem a lot of traders is facing. So in this video, I will be walking you through on how you will be able to spot when a major reversal wants to happen, and you can be able to reposition yourself and position yourself to the direction which the trade wants to take off to. So in this video, without wasting much of our time, let's head on to my weekly time frame, or my monthly time frame. This is where I normally start my analysis from. Then I head down to my 4 hours or 1 hour to take my entry. So with all being said, let's head over to my monthly and see what Gbpnzd hold for us. Then I go over to my monthly, enter my monthly. On my monthly time frame on Gbpnzd, we can see that overall the market has been down. Overall, the market has been down, but temporarily we are having an uptrend. So for the fact that the market is down does not mean that the market cannot bridge the downtrend and go up. So overall it's downtrend, but temporarily we are in uptrend. And I want to be taking the advantage of this temporal uptrend to take the trade to wherever it wants to stop. Okay, so in this monthly, I have been able to spot a particular pattern here, which you may not be able to see until we switch over to the lower time frame. I've been able to spot here, head and shoulder here, inversor head and shoulder pattern here, and again on this particular candlestick, the market has engulfed. There is a bullish engulfing candlestick here, just this one engulfed here. And the second move, there was an indecision candle, which is doji. And the third move, the market still engulfed, giving a strong bullish candle. That is a strong of bullishness in the market. And ideally, the market wants to come and, to me, the market is eyeing this particular zone here, this particular zone. So what I will be doing is that I will be heading over to my weekly time frame for me to show you how you can be able to spot that a reversal pattern in the market. So the market has been going down. If you are conversant with a chart pattern, you'll be able to know that what we have here is a inversor head and shoulder. The market is going down. For some reason, the market failed to come and make the market failed here, pull back, it came down low and still pull back, it came down. This is a clear formation of head and shoulder pattern, the left shoulder, the right shoulder. So what I will be doing is that in this kind of situation, what I'll be doing is that I will head over to my daily, since I've been able to know that from the monthly time frame the market is bearish, but we want to have an temporal uptrend. So I have known that from my monthly standpoint, and from my weekly standpoint too. The market has given me a reversal pattern, which is inversor head and shoulder. I've been able to spot, and on weekly there is an inversor head and shoulder that wants to take this market up to this particular zone. So if I've gotten this right now, I will put it down in my notes, and I will go over to the to daily. Daily is where I come to draw my support and resistance and trend line and look for any trade opportunity. 4 hours is majorly where I take my trade, 4 hours, 1 hour. So now on my daily here, then I will now pull up my rectangle and draw my resistance zone here. My resistance zone will come, my resistance zone will come up something like this. Then I will clone this. I will clone this to get another particular zone here. To get another particular zone here. Probably this is where we'll map out in our higher time frame, which is the monthly, which I said that here is the probably where the market is eyeing to come. Here is where the market is eyeing to come. Ideally, if the market fulfill all our criteria, this is where I'll be looking to take away all my profits. If the market fulfill all my criteria to go long on this market, then once I've gotten this thing, then it is in my mind now to start looking, where do I buy, where do I sell? Before I click buy or sell, I need all my criteria to be met. One, I've checked my monthly. Second, I've checked my weekly. Third is also confirming to me that the market wants to go higher. Then what I do next is I pull out my trend line. I pull out my trend line. I draw my trend line from swing low to the next swing point. Then I adjust it properly. In order for me to know where because if I'm thinking, if I'm on this opinion to go long, I will also check the probability of the market going against me. Because before I press buy or sell, I have seen the trade that I want to trade. I will also check what will be the outcome and the advantage of this trade. If I'm to go long, where will I have an opposition? Where will I have an opposition before the market start going in my direction? Here I'm looking at this particular zone here, this here and here. But as I'm seeing here, okay, now for me to get a clear confirmation where I could possibly get into trouble if this market fail to continue higher. Although on this particular trade, I am in this particular trade, but I get in a bit too early. But I will show you why I get in a bit too early on this particular trade. I get in on the 4 hours. There's what I saw on the 4 hours that made me to enter. But ideally, you don't want to enter this particular trade now, because it will be a premature trade. Once we get to the 4 hours, you will understand why I'm saying so. Then I pull out my Fibonacci level. I draw my Fibonacci level from the swing low to swing high here, to swing high. From swing low to swing high. Then I can now find that this particular zone here, this market is finding support at fib level 0.38 zone. But ideally, I'm not really convinced about this particular zone. But I would like this market to pull down to this 0.5 or 0.618 Fibonacci zone. But not all the time that market always pull down to this particular zone. But whenever you see market pull back to any of this particular zone, this 0.5 and 0.618, this is a golden ratio of Fibonacci. Whenever you spot that, just watch out for candlestick pattern. It can be hammer, it can be bullish engulfing, or pin bar. Any of those candlesticks you spot and at those particular zone with your confluence of trend line, you enter for buy or sell without wasting much of your time, because it is a golden Fibonacci ratio. So with all being said, I have been able to spot that, okay, this market is finding support at Fibonacci 0.382. But I'm not totally convinced. But nevertheless, this is a market of probability. Anything can still happen in the market. Anything can still happen. The market may just want to bounce up from here and start going higher, and it may also want to pull back to this 0.5 or 0.6. So whatever the market does, if it market comes down to take my stop loss and pull me out, I will still reposition. But best believe that if I see any reaction in this 0.5 or 0.618, I will still hop in for buy, because I know what the market is telling me. I've been able to get my direction from the monthly time frame. So these are my possibly buy entry zone. These three zone here, these are my possibly buy entry zone. And for any reason, if the market comes to break this trend line here, that means my trade setup has been invalidated. That means I will have to evaluate and reposition myself for whatever that comes next. You know, in this market, you don't trade what you think. You have to trade what the market is giving to you. You have to be able to know what is this market telling me. So at this point in time now, I will delete my Fibonacci and head over to my 4 hours, where I take my trade. I take my trade on H4. So that is where I will head over to now. So let me quickly also delete this trend line so that my chart will look really good. And so on my 4 hours here, this is where I take the trade. Why I take this trade is because of this candlestick formation here. I took this trade because of this candlestick here. As you can see, we have a clear, you can call it hammer or pin bar, but to me, I call it hammer. We have a clear hammer that just formed. That if you understand what hammer means, at some point in time, the market drove the price down here. So the bearish, they drove this market down, and the bullish take it off and close here. there's a sign of strength in the market. It showed me that the strength, the presence of the bulls are really in this market. Another thing that made me to go long is once I spotted this pattern. I spotted this pattern. This pattern is more of a double bottom. But ideally, if by the time you will be watching this video, I don't want you to enter, because that will be a premature trade. Because according to our weekly and daily time frame, you should understand that the market can still pull back. Market can still pull back because we have a lot of obstacles on our way. Like now, if I get my trend line from this high to this low, you will find out that we're still having obstacles here. We're still having obstacles here that where this particular market can still come and find a little bit obstacle. And this is another obstacle. I mean, the neck of the double bottom. You have to wait for the market to be broken. You have to wait for this particular zone to get breached. You see, how you do your top-down analysis purely is first, once you head over to your weekly, your weekly or your monthly, those are the higher time frame which I use mostly. You get over to your weekly and the market is pointing to you up. You get over to your daily where you plot your support and resistance, and also the market is pointing to you up. And you get over to your 4 hours or 1 hour where you take your trade, and the market is doing opposite. The market is pointing down. What you do at that particular time is for you to wait for a better confluence. It's for you to wait for the market. You don't want to be selling when market is still doing lower, low, lower, high, lower, low, lower, low, when market is still pointing down. That will be a recipe for disaster. You don't want to be buying in such case, which I did here, but I know I made a mistake. But let's best believe that this market will work out in my favor. And if it did not, I will still wait for this counter trend line to be breached. Once this counter trend line gets breached, and if anytime you're watching this video, you can just wait for this particular setup to happen. If this guy here completes, you can see that it was a rejection before the week closed on my 4 hour. If this guy here get here, break above here, break above this trend line and retest, but mostly it may not retest. But the idea is that you should always wait for this market to break this particular zone, this a minor support zone, which is the neckline of this double bottom. You can see first bottom, second bottom. So you should always wait for this market to break this trend line. Once the market break it, you will be looking for something like this for you to enter the market. If the market can commit something like this, perfect. That will be a perfect one. That would be a perfect one. If the market can do anything like this within as the week open, is a perfect trade for you to enter. It's a perfect trade. If for any reason I get stopped at, I will still re-enter again, but my first TP level will be here. My first TP level will be here, which is the 100% Fibonacci zone. This is where I will be taking my first TP, and my second TP will be somewhere here. But ideally, based on what I'm seeing on the higher time frame, which is the weekly, if for any reason the market gets here, I will just close 50% of my trade and I will hold 50%. And that 50%, I will be holding it to this particular zone here, this particular line here. Remember, this line is what we got from the higher time frame, which is the monthly time frame, where possibly the market can come and find some rest. So that this is where I will be targeting this particular zone. But surely I will take out 50% of my money here. If this market fulfill all my criteria to go long, I will take out 50% of my trade here. This will be a perfect trade of 1:3 or 1:2 there. But if you get in here, for example, those that will get in here after now, you get in here, your stop loss will be somewhere below this zone here. Then you take it off, you take this off here. That's a 1:3. Is a good trade. Why your stop loss? If you go on 1 hour, you will see that your stop loss is is in a very favorable zone where if market can come back here, it will invalidate your trade. This is a 41 pip stop loss, and this 163 pip 163 profit. So it's a very nice trade. It's a very good trade. This is where exactly I will take out my 100% profit here if the market confirm with my trading setup. And if it did not, fine, we will reevaluate and reposition to see what the market will do next. This is what I'm having on the pan New Zealand for the week to open. So as the week open, I will be looking for whatever the market does here. That is the decision I will be taking. As you all know that you always trade what you see, don't trade what you believe. I can believe that this market will come and close here, come up here, retest and come over to here. But market may just open and just come down here and just bridge this particular place and start heading lower. So whatever I see on the chart, that is what I will trade. Not like when I was still starting out to trade, I would just believe that the market is going up. And when the market is changing trend, I will not even focus on the trend that the market is changing. I will just believe that I want to go long. That is a bad way to trade. You have to react to what the market is telling you. So this is what I've been having in Gbpnzd. So let's head over to my Audchf. Audchf. Let's head over to my Audchf. I am having another setup on Audchf. Audchf, yes, okay. So Audchf, like I said before, you how to spot a major reversal in the market. We have to head over to our monthly first, and once you head over to your monthly, in our monthly time frame, we'll be able to see that for a very long time, Audchf has been in a downtrend. It has been in a downtrend. So now, how do you spot when this market wants to reverse? Okay, for now, we've seen a rejection here. We've seen a rejection, but this candle has not closed yet. We are having 17 days, 16 hours left for this particular candle to close. But nevertheless, we'll head over to our weekly to see. Remember, whenever you are not seeing, maybe you are not seeing whenever a particular time is not giving you what you need, is either you head higher or you head lower. So in this case, we'll head lower to see what the market is really telling us in our weekly time frame. In our weekly time frame, on how you can be able to spot a major reversal in the market, major reversal on weekly time frame, we can see that this market has come and put in what we call triple bottom. First bottom, second bottom, third bottom. What this implies that at this given point in time, this market has tried to come down lower, but there is a support zone that is holding this market here. There is a support zone that is holding this market here. There's a support zone that is holding this market here. This market came down here. It found support here. It came down for the first time, found support here. Came down for the second time, found support here. Came down for the third time, found it couldn't break up. It couldn't break below this particular zone here. Hey, there is a problem here in this downtrend. There is a problem. If for any reason I am on this particular trade for short, and I am seeing this kind of formation, I will exit without wasting time, because this market is telling me that there is an obstacle here. First, second, third. There's a clear obstacles. So what I will have to do is I sometimes I do plot my zones on weekly. Sometimes I do it on daily, whichever one that is most preferable to you can do. I do it on weekly and daily. That's where I get my most accurate support and resistance. Then I can also pull out to see another resistance level here. To see another resistance level. Those are the major resistance level that I'm seeing. And this market, if this market we have a break out of this neckline, and what I've been waiting for is the market to retest this particular zone, retest and bounce off of this particular zone. If the market can come back, close here, or pull down to somewhere here, then close above, then bounce up, then best believe that I'll be going for long. And there is this state that how long the market stays in a range also will be determined when the market break out. It is the same pip count the market uses staying in the particular range. That is the same pip count the market will give. So this market it has a range for about 230 something pips, and best believe that it will still commit the same thing. So what I'll be looking for is, once this market break above here, which it has done already, then close. Then if this candlestick close, then I'll be waiting for a bounce of this particular support zone and resistance that has turned support. I'll be waiting for a bounce because I don't trade support or resistance because of stop loss gone, because of market manipulation. I wait for the bounce. The bounce may be a counter trend break, or it will be a formation of higher low. That is when I will enter. So what I'll be doing, since I've spotted this, I will now go over to my daily time frame to know what my daily time frame hold for me. Since I've spotted this on my higher time frame, oh, my support and resistance got deleted. Let me go back there and get it. Okay, let me go back there and copy one of these things. So let me just delete this and go back to my daily to redraw them. Then let me head over to my daily, and now we are in my daily now. So what I want to be, this is exactly the formation we saw on a weekly time frame. This is exactly the formation we saw on a weekly time frame. This is the zone we plotted on a weekly time frame here. I clone this. I clone it. I want to get another zone here, which is the triple bottom we got on the weekly time frame. Then I clone it to get another major zone. Why I'm doing this is that this is another place where I will be looking at to take my profit if the market commit to me. Another place that I will be looking at to take my profit. These are the zones which I know the market will always come to give me a better confirmation. Since I've gotten this right. This thing, let me make it more tiny, because once I head over to the 4 hours now, it will look more bigger. Okay. All right. Okay. Now you see that on a daily, the market has broken, pull back, went up again. Now it's coming back again to come and retest this zone. So once the week open, I will be looking for the market to close below here. Once this market head here, once this market is able to get to this particular zone where my cursor is right now, then I will now head over to my entry time frame, which is the H4. I will now head over to H4 to look for possible entry. That is where I will now get my trend line, my Fibonacci, and whatever that I think that will can enhance my setup in order to be a high probability setup. So this is what I'll be doing on my H4 now. I can be able to spot that there is a trend line coming all the way from here. Although this may not be an accurate trend line, but at least it can still enhance my performance in order for me to know what the market is really doing. So this market came down here, found some support here. But ideally, I will still want this market to break lower, because if I pull out my Fibonacci zone from this swing low here, if I pull out my Fibonacci to this swing high here, I can see that the market already is finding support at 0.5 level, which is a good zone for the market to rest. But if the market decide to pull down to 0.618, fine. Best believe that any of these zones that the market wants to pull down to, I will be keeping my eyes on 0.5 or 0.618. So if the market, because most time the market may not likely come to 0.6, the market may just take a reversal at 0.5. That is when you now have to start watching for a candlestick pattern. It can be bullish engulfing, which is my favorite, bullish engulfing, or hammer, or pin bar, whichever candlestick that you know that work best for you. That is where you will now be watching for this candlestick here to form. Once this candlestick here form, you can with other confluences, you can now hop in. But I will be waiting for, if this candlestick form, I will be waiting for a close above this particular 0.382 Fibonacci zone. Once, if this 4 hours candlestick is able to close above this particular minor resistance zone here and here, if the candlestick can close above it, I'll be taking my buy entry from here. My first target point will be here, and my second target point will be minus minus 0.7, 0.27, but the overall target is still here. Remember, from the weekly time frame, we measure the number of people that the market has stayed in the range, and we are targeting the same thing, because the law of price action demand that in any particular range, how many pips that the market has accumulated in that particular range will be the same that the market will also produce when it breaks out of that particular range. So we know that from our weekly and monthly, from our weekly time frame, the market has been in the range about 235 pips thereabout. So we know for fact and for sure that once the market breaks out of that particular support or resistance zone, that the market will also give that same pip count in his way, but not to say it is 100% possible that the market will always do that. You know that this game is a game of probability. Nothing is certain in the market. You have to always be reacting to what the candlestick is saying to you, what the price action is saying to you. Always be very attentive what the candlestick is saying, most especially what are these candlesticks saying. Let me delete all my Fibonacci zone since you have gotten the idea, so that I can explain to you. You have to know what this candlestick implies. I recommend you read that Trading Bible, an ebook, Trading Bible. Definitely, I will put the link in this description below. So you have to read that book, and you'll be able to understand what the candlestick are telling you, the interpretation of candlestick. If you're able to know this, and with confluences of your support and resistance zone, with the help of Fibonacci zone, with the help of Fibonacci, those are key major tools you can use to kill the market, to make the market, with all these confluences come together, and knowing what the candlestick are saying to you, they are the best high probability setup you can ever find in the financial market. Not only to trade forex, you can also use it to trade crypto, stock, and other financial market which you can lay your hands upon. So with all being said, I will see you in my next video. But before then, keep peeping, and always believe that no one is an island. No one is an island. We are all here to learn. You learn from me, I learn from you. That is why we are all here until we attain the level which I call the CPT level, consistent profitable trader. And if you like my video, you think you got enough helpful resources from my video, please do well to subscribe to my channel and give me a like. And if you also don't like my video, please give me a dislike also. But please tell me in the comment box below what to do to improve my video, to improve in my next video. As you all know, nobody is island. I'm here to learn. You too, you are here to learn until we attain the level which I call the CPT. Until then, before I see you in my next video, I will come again next week with another super video like this. Until then, bye.